So when most people think of reverse mortgage, they think of it as a refi, tapping into the equity of your existing home to either free up that monthly payment or getting cash out. But what a lot of people don't know is you can actually use a reverse mortgage to purchase a new home. No monthly payment is required, but it's a nice way to get that done all in one transaction. So it's called a HECM for purchase or reverse mortgage for purchase. HECM is home equity conversion mortgage. It's FHA's language for reverse mortgage. And then there are proprietary products that just use the terminology of reverse. It's just like a traditional loan. You bring in your down payment, whatever is required. A lien goes on the property for the lender, no monthly payment, and you own the home. No monthly payment is required. You live in it and you love your home just like you would with any other traditional mortgage. So how the down payment is calculated is a little different. It's based off of your age. So on a traditional loan, the qualification is highly based off of your credit score and your debt to income ratio. While a reverse will look at scores, and the actual loan amount is totally based off of your age and what percentage of your purchase price they will let you, or what percentage of the purchase price you can borrow based off of your age. So typically somewhere around 40 to 50%, again, depending on your age. So if you're closer to 62, it's probably around that 40% mark, a little bit less the older that you go. The older you are when you do your reverse mortgage, the more they will let you borrow. So yes, the down payment is quite a bit bigger than a regular loan, but that's the trade that you're making to really not have a monthly payment, and really protects everybody, protects the lender, protects your estate. They're not gonna let you borrow or do a reverse mortgage like 5% down. Everybody be upside down really fast under that scenario. If you put 50 or 60% down, you're not going to be upside down in your mortgage anytime soon. No one really wants that. However, if that happens, you're protected. You're totally okay as long as you meet the other requirements of the loan. So the exact down payment will be, like I said, is based off of your age, the purchase price of your home. The older you are, the less you have to bring down. And current interest rates will also have a little bit of an impact on the percentage they'll let you borrow at the time. Down payment sources can come from a variety of different sources. Proceeds from the sale of a current home is by far the most common, but you can use your checking, savings, retirement accounts. You can even get a gift from family if that's what required. But for most people, especially if you've been in your home a long time, your largest asset is your home. You probably have a lot of equity in there, in your property, that you could tap into. So a reverse mortgage, like any loan, isn't for everyone, but it does make sense for a lot of people. A couple things that you should consider before looking into a reverse mortgage is, obviously, are you old enough? 62 or older for most reverse mortgages. There are some 55 and up proprietary products. Just know on those ones, your down payment is going to be requirements is going to be that much higher. Are you planning on staying in the home long term? I wouldn't do one of these loans if you're only going to be in a place for a couple years. That's probably a different conversation. Do you have enough money to cover the down payment? Obviously, that's a big factor of qualifying for this loan. What are the goals of using a reverse mortgage versus a traditional mortgage? Are you trying to preserve your monthly cash flow? Do you have, maybe your asset rich income? Maybe you want to, make sure you keep cash in your pocket and borrow a little bit of money for the home. I always like to see when people leave cash left over. Maybe you're relocating from one state to another, or downsizing from a larger property to a smaller property and don't want a mortgage anymore. Where I wouldn't use a reverse mortgage, again, like I mentioned, is if you're planning on this house being like a short-term property. Maybe you only plan on staying in it for a couple years. There's probably other ways we could structure that make more sense. If you don't have enough for the down payment, one thing to consider is, are you buying a home in a property are you buying a home in an area that the property will maintain its value. The home equity for a reverse mortgage, if you become upside down in the value of your home, that's one of the protections in place for a reverse mortgage. So that's not necessarily a loan requirement, but something to consider for your long-term plans and for your estate planning. And then, are you really able to maintain whatever property you're looking at? Can you pay the taxes, insurance, or the other monthly obligations doable for you to manage? So that leads into the next topic of the actual requirements of the reverse mortgage. So a traditional loan is highly based off of your credit score, debt to income ratio. A reverse mortgage is not looking at those things so much. They will do some assessments on your credit and some assessments on your income. But what they're looking at is, can you pay your property taxes? Can you keep those current? Can you pay your homeowner's insurance, HOA dues, and can you maintain the property? If they feel like you cannot pay those, it doesn't mean the deal is dead. However, they will set up a escrow account for you, which is called a LISA. Ideally, you don't want to do that. What the LISA stands for is, or LISA is a long-term escrow account. So they're going to make you put, there's a calculation for it, but they're going to make you put like 20 grand into an escrow account because there's no monthly payments being collected. There's no way for them to manage that escrow account for you on a month-to-month or year-to-year basis. So they're going to make you put a large chunk of money into your escrow account. And that way they can pull from that lump sum over time to make sure that those are maintained. So ideally, you don't want that. They're very expensive, but we can still do them. Maybe that's something if the lender requires it. If you've had if you don't meet the financial assessments or you've had some credit issues, they might put that in place. It also has to be your primary residence, which means you have to live in it the majority of the year. It doesn't stop you from owning other property, but this has to be, the property with the reverse mortgage has to be your main property that you live in, like I said, majority of the year. They will send you a letter every year that you will sign confirming it's still your primary residence. You will also have to take a home buyer's education course or counseling course that goes over reverse mortgage in depth. This was a layer of protection that was added in the recent years to make sure that borrowers understand exactly what they're getting into and that loan officers or whoever's selling you this reverse mortgage isn't just making it sound like it's free. It's not free money. There are closing costs, there are interest accrues, but they want to make sure that you're really clear on how that works. So get your process, just like any other loan, going early. You will have to do the counseling before you can even apply. And it's quick, but it does take a few days to get on the schedule and get your certificate back. So make sure you get that done. How that works is I will generate a quote for you and then I will give you that quote to provide to your counselor. So there's a few steps before you can even get into the application process that, again, are for the borrower's protection. There are cons to it that you need to understand. Property type, you can use this loan to buy a single family home, condo, townhome, a multi-unit. So you can even use this to buy like a duplex. It can be an income generating property as long as you are living in part of that property. So that's something to think about, a nice way to maybe offset that interest accruing. You can also use it to purchase a manufactured home that meets regular FHA guidelines. It cannot be used for vacation home, rental property, or mobile home. So some benefits of a reverse mortgage here in Utah specifically, our property values are pretty stable. We continue to see property values increase, so it makes it, I think, a little bit safer to do. If you're moving in from out of state and you're in a higher cost area, this might be a great way to get into a really nice home without having a monthly payment. Maybe it's a lower price point than if you're coming from, say, like a California or New York, something like that. So reverse for purchase is a great option, whether you're downsizing, relocating, or just need a house that's a better fit for your life in retirement. This is a great product to at least understand and see if it makes sense for you. If you have questions, drop a comment below. We'll chat about it. If you want to run numbers, please reach out. I'd be happy to chat with you. So, thanks.